Welcome, everybody. We are here, obviously, the first day of the week. There's a lot to talk about. And also, there could be a massive crash similar to 2008. And no, I'm not just blowing smoke. We might see a bank, a very, very big bank, collapse. So there's a lot to cover off. AJ, I know you were just mentioning, what the range was, and you put it up on Twitter. So everyone make sure that you follow us if you don't already. But how much was that range that we saw Bitcoin's price over the past weekend?
Yeah, so over the weekend, we haven't seen the price move at all. The range was around $600, $700. We saw Bitcoin just trade within that range. So over the weekend, it was very, very boring. I wanted to come live, to be honest with you, but there was nothing. There was nothing to talk about over the course of the weekend. It's one of the most boring weekends I've seen within Bitcoin. And the question is, why are we seeing this? What is the market waiting for? I do think a big move is going to come. There is a breakout that I do think is going to come, and we'll finally get that big move. But for a from the 13th of September, we have just been ranging sideways. So it's a very boring market at the moment.
Probably more of that to come as well.
Yeah.
So, guys, I'm just on here. I'm going to rattle through a couple bits of news here. So, I am looking at there's a board meeting today. It's a closed board meeting, so not many Q&As and stuff. What we will see, I believe, in 2 weeks' time is we will get the minute notes from this board of governors just talking. And I think this is pretty much what are we going to do and what's going to be the rate hikes. This is just one of the meetings they have to kind of make sure they're on top of everything. But as we said in the thumbnail, look, we're looking at stocks falling and we're looking at them pretty much bringing the rest of the markets down. So I believe if we look at, I'm going to bring up investing.com. I think the S&P is down about a 1.5%. And then also if we look at, let's go indices, I think the NASDAQ is around 1.5 down on the day. Okay, so here S&P 1.5, Dow Jones 1.7, and also the NASDAQ 1.5 as well. So it's not looking good. Also, volatility is up as well. And we can kind of see this reiterating. Stocks continue to fall, and everybody is now talking about Credit Suisse, very big bank in Switzerland and well, globally, but I believe they are a Swiss bank. I mean, I'd imagine that, right, AJ? Swiss?
Yeah.
I feel confident about it, but it could be a trick question. Anyway, so we're going to talk about that just in a second. But the overall sentiment is just people are worried. People are very worried. Credit Suisse could be a big catalytic event, which does cause more stocks to capitulate. And this is something that people are looking at. But having a look here, so look, oil jumps as OPEC considers a big cut. So again, adding to that global recession fears, we're having OPEC, which is the oil producing economies of something. I can't remember exactly what it stands for, but basically it's just like a big. It's not a cult, but all of the big oil producers, so like Russia, Saudi, UAE, etc. They're all in basically like a club, and so they said, look, we might cut production by, I believe it was 1 million barrels a day. And so cutting that, obviously, you're reducing the supply massively, but increasing the price of the oil. So this is another thing that people were looking at. And then also treasuries still rising again, which is not good. We did see last week, though, a little bit of money falling into the crypto space. So looking at Bitcoin, 7.7 million in, and this is from institutions and also into Ethereum as well. But then, some short Bitcoin. Overall, the risk sentiment from the institutions anyway is away from the altcoins and into the major, the big brand names, the Bitcoin and Ethereum of the world. And that came heavily from Sweden and also the USA. Now, we did see that last week, I think it was France, Germany, they did put a lot in because of the worries about inflation, etc. And so now there's, it's kind of being balanced out by the US now jumping in a little bit late to the party. So that's
And
what happened.
just adding on quickly to what you said there as well, with the institutional investors, they are only going into the big ones right now, Bitcoin and Ethereum. They are staying away from those altcoins. And the reason for that is because if we do see Bitcoin have another crash, another leg down, then these altcoins are going to get hit a lot harder. So you do have to follow what the institutional buyers are doing, because they know a lot more than the retail investors. And if the institutions are only just buying Bitcoin and Ethereum at the moment, then that's probably the best thing to do, because they know that if the market goes down, their portfolios would get absolutely smashed if they were buying altcoins. So you sort of have to think the same way as institutional investors.
They definitely serve as like a good guidance, don't they? Like a
They do.
compass, shall we
Yeah,
say?
they do.
Now, another bit of news just to add on. I know Alex Mashinsky, he actually resigned as CEO of Celsius. Now FTX are looking to buy Celsius's assets. But another little bit of like fraud, this guy just every single week, there's just a new news story. He was personally trading funds. He's now withdrawn 10 million weeks before bankruptcy. It's absolutely insane. We're made for tax payments. So this is, a spokesperson for Mashinsky has said, "Oh yeah, actually it was just for tax payments." But this just gets worse and worse. He every single time there always seems to be this guy in the crosshairs. And then his wife selling T-shirts, "Unbankrupt yourself." It's like you were the ones who made us bankrupt. You absolute. um, but anyway,
It's like
I'm
a
gonna
middle
bring
finger
this.
to the face, isn't it?
Yeah, exactly. It is. It is very much like, oh yeah, oh wait, we stole all your money, and also, yeah. Then they're like, so we stole all your money, and you can't access it. But hey, buy my T-shirt so you can unbankrupt yourself. It's like, shut up, I did also see that they wanted to begin opening up withdrawals and deposits, and then start selling stable coins. And I think the FTC or the SEC, they basically said no in the US. They were like, no, like you guys, you've like you screwed the pooch on this one. I'm not just going to allow you to start selling stable coins so you can make some money. But yeah, that's another story. I'm bringing this back onto Credit Suisse. So I know you and I mentioned about this, AJ,
Yeah.
offline. Trading like a Credit Suisse. Yeah, trading like a layman moment. Credit Suisse, Deutsche Bank suffer from distressed valuations as the bank's credit default insurance nears 2008 levels. Basically, what you can do is you can basically buy a credit default swap. This is an instrument. If you've ever seen The Big Short, if you haven't, recommend it. It's my like top two favorite films of all time. And so a credit default is basically the instrument that what was his name? The one with the eye, one eye. Oh my God, how I want to say Burry. I want to say Bill Burry, but that's not right. Anyway, so this is the instrument that got heavily used, and people made loads and loads of money. That's what The Big Short is all about. During the 2008 financial crisis, this is basically saying, look, I think Credit Suisse are going to default on their payments. If they do, I want a big payout. So what we're seeing now is an increase in these bets. Betting against Credit Suisse that they are in fact going to default, and they're at pretty much a 14-year high, back to the same levels or almost as the 2008 financial crisis. Obviously, everyone's like, right, well, these guys are going to default. When they do default and they can't pay because essentially the company's gone bust, then I want a big payout. So this is what everyone's worried about, and it's something that I think we need to look at, because this could, if Credit Suisse go under, this could be a massive catalytic event, because Credit Suisse have been around for years. I don't know exactly when they were formed. Maybe we have some information here. But basically, they've been around almost forever. And so when we're looking at them potentially going under, that would just cause massive fear in the stock market and would crash every asset, almost.
And
Not
the
the
market really can't afford that at the moment. The current state of the market is not good anyway, and that happening would just sort of be the end of it.
Yeah, exactly. It would. It
Not for
really
everyone.
like it really would push everything down
Yeah.
massively. But yeah, so just looking, year to date, it's down by 56%, which, to be honest, as us crypto guys, that's not really too bad. But looking at the likes of stocks, that is pretty crazy. So yeah, just wanted to. I think we should. We need to follow this quite closely. I know it's the stock market, but I think we should follow it quite closely, because that will give us an indication as to how worried the market is as a whole. But anyway, AJ, should we have a look at some? Where do you want to go? Do you want to go traditional markets,
Yeah,
or have a look at Bitcoin?
we will start off with the traditional market then. I'll just share my screen. We can see here we have the S&P 500, and as we know, I posted this on Twitter as well. We have
Michael
actually
Bell.
broken towards the downside of the major support level that we have been looking at. So as we can see right here, major support here, and previously as well, all the way back here, we've used it as a bit of resistance before the break towards the upside. And then once we broke towards the upside, we used it as support as well. So this is a major support level, and we have broken towards the downside. As I said, as I've been saying in previous lives, this is looking very similar to that 2008 crash. And with that fundamental news that we've just seen with the Lehman Brothers scenario potentially playing out again, this really does not look good. Does it mean that we are going to see a 2008 crash? No, it doesn't, but it means that there is a possibility that we could see that. And the technicals are sort of lining up with that as well. As you've seen me show you before, this is looking very similar to that 2008 crash. We had the rejection from the 200 MA, which is this yellow line here, which happened in 2008. We came down to this support level here and broke that, which happened in 2008. And the way the price is moving looks very similar to the 2008 crash. And then we've seen the price just continue to come down. Now, the one thing that is different this time rather than last time is that we actually came up and retested that support and got rejected. Now, me and Ben have spoken about this before, saying that this has sort of cemented this scenario because we have actually come and retested that support that is very similar to that support in 2008 and actually got a rejection from it. So it's sort of solidifying this scenario. And then obviously we have these shorter term daily support levels. So we have this one here, which we broke towards the downside, got a retest and then a rejection. We've come down, and then I told you we would come back down to this previous low here, which has happened. Now we've broken this. What I am expecting is that the price is most likely going to come down to $3,230 approximately. That's my next target if we do stay below this support level here. So what I do think is going to be a likely scenario is that we do come back and maybe retest this previous support as resistance like we did back here and like we did after this break here as well. And then we will most likely see a rejection. And then I would expect the price to come down here. There is that possibility that we could get a fake out. We could break back above this support level and use it as support, this resistance level, and use it as support again. But I do think we are going to come back, potentially retest it, get that rejection, and then come back down to $3,230. Now, that is the next support level I'm looking at, because if we have a look here, we have respected it very well. It's the next level that has been very well respected previously. So you can see right here, lots of support, resistance here when we were below it, and support when we were above it back there as well. So that is the next major level that I am looking at the price coming down to for that S&P 500 now that we are below this major support level here. So if that happens, of course, we are going to see that feed into the crypto market. We are going to see Bitcoin and altcoins, Ethereum, come down. We are going to see them have a bigger pullback. Now, looking at the DXY, this is giving us a very good indication of where the price of risky assets could go, such as traditional markets, such as crypto. Now, obviously, we know that we've been in a very big uptrend over the course of this year. Bitcoin, we've been in a very big downtrend. When the DXY goes up, crypto goes down. Same with the traditional market. When DXY goes up, the traditional market comes down. And what we are seeing is a number of higher highs and lower highs. And it looks like that pattern is continuing. So what we have here is we've had the pullback, and we do actually have a weekly support level here. And we are finding support on that weekly support level. This is the daily chart, but we are using that weekly support level as support, and you can see we are getting a slight bounce. Now, potentially, this is the next lower high from this massive uptrend that we have, and we could see the price increase from here. Now, I do anticipate if we do stay above this $112 level approximately, I do think that next level that we are going to see is the $120 level. Now, I do think that around the $120 level is where we could top out. Now, we've spoken about this a lot. November, we have that the FOMC meeting, and we are predicting a 75 basis points. If we do see a 75 basis point rate hike, we are going to see the DXY continue to push towards the upside. But once they start, you know, putting out lower basis point rate hike, so say we get a 50, say we get that in December, then I do think, we are going to see that DXY pull back, and that's when we're going to see the traditional market and the crypto market pump. So I do think there is still time that we could see DXY come up to 120. That is my next target if we do stay above this $112 level. So if we do see that, we are going to see the traditional market and the crypto market continue to push towards the downside. So I do think that this uptrend is still in play, and I don't see any sign of this uptrend stopping as of yet. I do think we are getting close to that top on the DXY. I do think maybe January of next year, we could see this DXY forming some sort of downtrend, and we could see the dollar start to fall in price, which obviously is going to be very, very good for traditional markets and the crypto markets. Before we get on to Bitcoin, I want to show you a quick chart that I've seen. So this was posted by Willy Woo on Twitter. Now, what this is the Bitcoin max pain, so Bitcoin supply underwater, and basically what these lines here are showing us is past cycle bottoms. So the past cycle bottomed when approximately 60% of the coins traded below their purchased price. So when 60% of the coins purchased were traded below the price that they were bought at. And previously, so back in 2014, 2015, it did predict the bottom of the bear market. And also in 2018, 2019, it did also predict the bottom as well. Now, this is coming in at around $10,000. So this is just cementing to us. It's not telling us that the price is going to come down to $10,000, but what it is telling us is that if it does come down to $10,000, there is a pretty high chance that we will hold that $10,000 level as support. And that brings us on to the charts, because we do have lots and lots of support coming in at around $10,000, $12,000. So you can see here approximately 12,000. There is major support from using this level as major resistance previously. As you can see right there, we've used it as so much resistance previously, so it's going to act as support. We also have the golden pocket, so coming in from the low of March 2020, which was the COVID crash, to the all-time high, which was just under $70,000. We do have the golden pocket coming in at around $10,000, $12,000. That's sort of the range of the golden pocket, and there is a lot of confluence at that level. So adding this on-chain analysis as well, coming in, this on-chain analysis coming in at 10,000, the support being at 10,000, and then the technical analysis coming in around 12 to 10,000. There is a lot of support around that level. So if we were to break this major level here, which is the previous all-time high from back in 2017, I don't expect, unless something happens globally, something really, really bad happens globally, I don't expect the price to break below $10,000. I don't expect a candle break below 12,000, but I think we could see a wick maybe down to 10,000. That gets bought up pretty quickly. We hold 12,000 as a candle close, and then we start seeing the price push. So this is just signaling to us that there is a lot of confluence around that $10,000 level. There is a lot of support around that level. And for me, it just doesn't look as though we are going to break that $10,000 level, unless, as I said, something very, very bad happens, such as a similar situation to what happened in 2008, which
End of the
right
world.
now is looking not possible, but something that could potentially happen.
Yeah, and I mean, like like we've said before, and I probably will bring it up again when I next find it. But just all of the order data. There's so much data that there's so many different orders that have been placed, and the volume it gets to 10,000 and then pretty much just cuts out. So I think yes, there would if we went below 10K, which again, as we both said, we don't think that we will. But if we do get around about that, like kind of even 12K, there's going to be so much pressure and so many people buying,
Yeah,
then it's just going to be one of those like, okay, we might, like you said there, we're going to wick, but not too much further.
yeah,
Bitboy was calling for 10K. Well, last cycle, Bitboy also said 320K, and it went to 69. So I take that with a pinch of salt. With all due respect, he is a really, really good YouTuber. And I'm not causing any fights, um, but yeah, 10K. I think there'd just be so much panic buying around about that 12K. I do. I'm with AJ on that side.
yeah,
A wick down to 10 maybe, but
yeah,
candle close, very unlikely to go.
yeah.
I would even say 12K is quite low as an estimate.
Yeah, yeah. The only reason I do think that 10,000 is that possibility is because if we go from the all-time high, percentage pullback from the all-time high,
Yeah.
and we are looking at, if we look at the previous bear markets have had between a 83% pullback to an 86% pullback. So say we were to get maybe an 85% pullback, we would go down to 10K. But yeah, if we got an 83%, then we would sit around $12,000. So that's why I do think 10,000 is a possibility. I only think it's going to be a wick down, but it is still a possibility. But as Ben said, candle break below 12,000, I wouldn't expect it. The exact target would be around 11,400. I wouldn't expect a candle break below that level because, as you can see here, previously it's been major resistance and even support. So if we go back to 2017, we broke above this level and we actually retested it. We've used it as support, and then we got a little bounce off that level. We used it as support there before the break towards the downside. And then ever since that date, we've used it as resistance before breaking towards the upside. So I would expect to use it as support if we did come back down to it. But looking at the shorter time frame for Bitcoin, as you can see, I posted this on Twitter earlier today. Nothing has happened at all for Bitcoin over the course of the weekend. So since the 30th of September, the very last day of September, we've seen absolutely nothing happen within crypto, and we haven't actually broken below that golden pocket. I posted that on Twitter as well. There is some confluence coming in between $19,030 and $19,115 approximately, because we've got the golden pocket from this low on the 28th of September to the high here on the 30th of September. The golden pocket comes in at around that vicinity. And we also have this massive range that you can see here. We have the point of control, the POC, that red line here, that is coming in with strong confluence with that golden pocket. So as you can see, we are finding a lot of support there. If we were to break this level, I do think we could see the price pull back, maybe come back down to the previous lows at $18,400. I do think we would have a pretty significant pullback if we did on the shorter time frame, if we did break this this support level here. So as you can see, we are using it as very strong support over the course of the weekend. We did use it as very strong support, and we are continuing to use it as support. So we're either going to continue to hold this as support, maybe come up to the larger time frame golden pocket, which is sat at around $19,600. But as I said, if we do break this support, I do think we will see a bigger pullback because, as I said, it's a major support. It's a major support level on that shorter time frame. So we would most likely see a reaction if we were to get a break towards the downside. Now, we still have this descending triangle that's forming on the 4-hour chart. It looked like we were going to break it on the 30th of September. As you can see right here, we attempted to break towards the upside. Unfortunately, there wasn't enough buying pressure to push that price above the resistance. So we stayed below and we did get a rejection. We're getting close to testing it again. The likelihood of it is that I think if we do come and test it again, we will get rejected again. And for me, it's looking more likely that we are going to come back down and test this blue daily level here. As you can see, we've used it as major support here. Now, this is a daily level, but it's been very, very well respected on this 4-hour chart, on the 8-hour chart, and the 12-hour chart. We haven't actually had a breakout towards the downside on that 4-hour, even though it is a daily level. So I do think we are going to come back down to this level. Reason being, DXY is continuing to push towards the upside, forming those higher highs and lower highs. And it looks like the S&P wants to move much lower as well, because we've broken this major support, maybe coming back for a little retest before the rejection. So for me, it's looking more bearish than it is bullish for me right now, and this descending triangle is a bearish pattern in itself as well. So the likelihood of it is I do think we are going to come back down to that daily level, and there is a possibility, if we do continue this uptrend on the DXY, that we are going to break towards the downside of this daily level. And then we're going to be looking at the bigger time frames, and we're going to be looking at those next levels. So the next level for me, if we did break this major level here, got a weekly close below this major support level here, then I do think the next level that we will be looking at is around 14,000. That is a monthly level. If we look at the monthly chart, as you can see here, we've used it as a resistance here as well. So that would be sort of my first target. And I think we could find a bit of support there. But if we broke below that, then the next level is $12,000 and potentially $10,000. But as we said earlier on, only a little wick down below 12,000. Now, moving on to Ethereum quickly, just looking at the daily chart, we do still have that price target of that rising wedge. Let me see if I can bring this up. Here we go. So we had this rising wedge on the 12-hour chart, as you can see right here. That is still in play, and the target is around $1,000. So I'm still expecting that price target to be hit. But what I'm looking at right now is on the daily, we are actually seeing maybe a sort of bull flag, but with everything that's happening with Bitcoin and the DXY, for me, it's not going to be a bull flag, is it? But it is a parallel channel that is descending. Normally, they are bullish, so maybe we could stay within this parallel channel, but if we do see Bitcoin continue to pull back and the DXY continues to push towards the upside, I would expect to break towards the downside of this. We do have this daily level coming in as well, this blue daily level. If we do break that, then we'll most likely come back down and test the support of the parallel channel, and then we'll probably come back down to that $1,000 level. If we break that $1,000 level, then we're going to see a lot more pain for Ethereum, potentially coming all the way back down to $600. But right now, we're just waiting to see what happens with Bitcoin and the DXY. If the DXY continues to push, we're going to see Bitcoin break these major support levels. And if that happens, then we're going to see another big leg towards the downside for Bitcoin. And that's my personal opinion.
No, I like that. Absolutely. Couldn't agree more with you, to be honest. One thing that's interesting here, Dan has said the Fed could announce a pause today if they want to save the drowning foreign banks. I don't think they will. And there's a couple different reasons here. So this, yeah.
Is that me who's frozen, or is that Ben?
Oh, well, I don't know.
Let me know in the chat.
Oh, huh?
I don't know. It was either me or you, or froze for a minute there.
Okay. It might have just been that I tried to collect my thoughts, and I was like, it's just me being stupid. But basically, what this whole inflationary and very strong dollar situation has actually created is a scenario, and some people are saying that the Fed might be tightening too much. And that's because what we're going to see is, with all of the different countries that have a weaker currency versus the dollar, we're going to have the dollar being extremely strong, so they can import loads of stuff very easily, because when you pay them in, let's say, pounds, for example, or euros, your $1 goes much further. So you can buy much more produce and much more material from these poorer countries. just based upon you having a stronger currency. So that's one thing that we should consider. The price of living, or the cost of living, I should say, on imported goods will continue to fall as the US keeps buying all this stuff from other countries. But then also other countries are going to struggle because they're not going to be able to import stuff from the US. So we're going to have a lot of strength in the dollar continued, and it's going to be that kind of like almost like the lunar crash where because you then have like less lunar, or it's worth less, then you're burning, and then you get like the stable coin, but people are then burning that. So that death spiral, I think that's kind of happening. And just because everyone's now more scared, they just keep taking money out of these economies, such as the eurozone or the pound or whatever. So that's one thing that I think we really should consider to be quite a serious threat, I would say, to the general global economy. So yeah, one thing that I think is going to be in favor of the US inflation coming down a bit quicker at like a faster rate, I should say. And it won't be necessarily this month or next month, because you need time for this, this like purchasing power to actually have an effect. But yeah, I don't think the Fed will announce a pause. I think it'd be extremely bad for the markets if they do, because then we'll just be stuck in this inflation forever. But you do have a point there in mentioning that, yeah, the Fed could be over tightening because they do have the benefits of having a stronger currency, and then therefore imports and exports are very much easier for the US. I just wanted to kind of touch upon that, so that we might end up with quite a strong US but not European bull run in the early stage of next year if we have over tightened, or the Fed have, because I still think we're going to get that 75 basis point hike. But yeah, I just wanted to kind of throw that out there for you, something
Yeah,
to consider.
and Robert Kiyosaki, I'm sure
Oh
you
yeah,
know it. I'm sure you've heard of him. He's suggesting as well the dollar
call
will
that.
crash by January, and suggests buying Bitcoin. So he said, I believe the US dollar will crash by January 2023 after the Fed pivots. And yeah, we've talked about the basis point, the FOMC meetings, and what we think they're going to be doing, the 75 basis point rate hike or a 50. And, we've spoken about November being 75, and then December being that 50. And, that will line up with what he's saying as well. When we start to pivot and go into the 50 basis point rate hikes, then we are going to see that dollar come down, and we are going to see the traditional markets and the crypto markets push towards the upside. That is what we are expecting, and that looks like what Robert is expecting as well. And Robert Kiyosaki is very well respected within the investment industry as well, within the
Can I
markets.
also add on to that here?
Yeah,
So just to bring up my screen here, so adding into, there could be a crash in the early stages of next year for the DXY, not the stock market. I think the stock market will pump as the
yeah,
DXY drops. But if you just have a look at this here, the Fed fund rate, this is the target. They want to be at 4.4% by the end of this year. But then by the end of next year, they only want to be at 4.6, I believe it is. Where is it? Yeah, 4.6.
yeah,
So they want to be at 4.6 by the end of next year, but 4.4 by this year. Now, bear in mind, we've gone from 0 to 4.4 this year. Hence why we've had the fastest level of rate hikes in history. So we're seeing this like extreme push up to 4.4, but then we only have to go up by 25 basis points to get us into this, to be up to now 4.6. So, we've had all this craziness. Now, once they're going to take the foot off the gas, and they will be slowly increasing throughout 2023, but only they're not going to do a 75 basis point hike,
no,
because they only need to be up by 20 over the whole year. So, I think we'll probably get to a stage where they just stop, and they won't necessarily, start lowering the rates. I don't think they're going to do that, because we'll look even more forward into 2024. They will begin lowering them by the end of 2024. So I think we're going to stay at these high levels during 2023, which is this data here. So we're going to stay at those high levels, but we're not really going to do much. So 2023, that's going to be the pivot from the Fed. And like you said, I think that's going to drop the dollar, and it will push up all of the major indices and also crypto,
yeah.
which will be very exciting.
And when we get this maybe 75 basis point rate hike, the market will most likely price in the rate hikes for next year as well, because there's not much that they're going to do next year, as they portrayed there. There's not much they're going to do, so the market will most likely price that in much earlier, um, much earlier, much more in advance, and we'll most likely see the market push towards the upside, the traditional markets and the crypto market push towards the upside next year. Now, I'm not saying we're going to be back at all-time highs next year, but we could be getting up to those all-time highs, getting up to the maybe potentially high 40Ks, close to the 50K, potentially. But I do think it's going to take maybe 2 years to get back up to the all-time high. But yeah, next year, for me right now, next year is looking good. And over the next few months, over the next couple of months, towards the end of this year, I do think we are going to have another leg down. But yeah, for me, it's looking really, really good for next year.
Yeah, I agree. I agree. I think over the next month we're going to see a little bit more movement to the downside, and not necessarily a bad thing. It allows us to accumulate. These rate hikes are going to come in 75 basis point up, bringing us up to 4% from our current 3.5, and then another 50 basis point in December. Again, kind of still squeezing the market, but shows a bit of like a reversal beginning, and then early in February, just a pretty much the same.
Yeah,
So after we've done our 50, the most likely scenario is basically no change or a little 25 basis point. And that would then be enough for us for the whole year. So we look into March, the most likely is no hike, May, no hike, June, no hike. So ending up at this level, and then we can just stay like no basis point hikes for the rest of the year. Now, I
yeah,
don't think that, one thing I will say is obviously this does mean that it's getting more expensive for companies to borrow money, to hire, obviously, if they're borrowing money, to basically do anything to expand their business. So the economy will be squeezed, inflation will be coming down, but the general stock market, won't be in this level of fear, which I think
yeah.
is probably worse for the market than anything else. It's just that fear, isn't it? So
Yeah. Now that
there you
scenario, it's looking likely now, but we also have to remember that something bad could happen. Obviously, we've been looking at the Lehman moment as well. If something like
go.
that happens, if a global war happens, another World War III or another world war, then we would most likely see the markets get completely demolished. And there is that possibility, because we know that all the economies are not doing very well at the moment. There's a risk of a world war going on at the moment as well. So that scenario, it's not cemented. It's not certain that it's going to happen. But say nothing globally happens that is going to destroy the markets, then that is the likely scenario that we are anticipating to happen.
Yeah, I agree. Yeah, couldn't agree more, to be honest. So what we'll do is we'll keep you up to date. There's not really too much going on later on today
Yeah,
that you need to be worried about in terms of like volatility or anything like this. So I would say, look, overall we're kind of in an okay position, but obviously a little bit more downside. Currently, yeah, everyone's just scared.
yeah,
So it's just a case of be very careful. Always make sure that you're using a stop loss. And just be aware that people are talking about Credit Suisse. People are talking about one of the biggest banking institutions going bust. It's absolutely
yeah.
insane, and that could be a massive catalyst. So watch that, because that would drop Bitcoin hard.
Yeah, definitely. And if you enjoyed this video, please make sure you smash a like on it. We do really appreciate it. It does really help us out, and it's free.
Yeah.
So make sure you smash that like button. Thank you very much.
Yes. Thank you very much, guys. Thanks for watching, and we will see you tomorrow.
See you tomorrow, guys.
Take care.